So let's start out with Tony. So Tony, what's going on with interest rates? As a realtor, we get buyers that are kind of on the fence, saying, "Well, we kind of want to wait till the prices go down," and then I try to explain, "Well, if the prices may go down, but the insurance rates go up, you're kind of fighting a losing battle." So tell us a little bit about interest rates, where you see them going, and your take on that.
Yeah, it's so you're right, and this is a conversation that we have a lot with people on a daily basis. So there's a lot of conflicting perspectives on what the future is going to bring for us. And there's a lot of dynamics that obviously play into this. So mortgage interest rates are tied to the bonds. And typically, as a rule of thumb, if the bonds are going down, the rates are going up. And if the bonds are going up, then the rates are coming down. Well, there's obviously a lot of different variables that play into that. This whole COVID craziness has absolutely been
Yeah.
a part of that. But one of the other things that we're, hearing a lot about is going into the future is that if the Fed backs off of buying mortgage-backed securities, then it is possible that it will increase the interest rates because the bonds are going to drop. The value
Right.
won't, they buy mortgage backed bonds, right? And
Right.
so if there's no demand for those bonds, then the price of those is going to go down and the increase of the rates is as a result going to go up. There's other people that believe because of inflation, which we all know that we're facing, we see that at the grocery store, or we see that at the gas pump and pretty much any place else that you're living life, that
Right.
they've got to be careful. We have to be real
Sure.
careful if they allow the rates to go up substantially, then that's going to compound the economy issues and things of that nature. So a lot of things happening, but I want to lean into your point about waiting, and that's a question that we hear all the time. Are the values going to go down? Is there going to be an impact because of what's happened? And there's several things that play in here. One is go back in history. Those of us that have been around for a while experienced the meltdown period from 8 to
Yeah.
11. And that was obviously, I always say I need the men in black to come in and erase my memory because those were
Right.
some
Right.
rough years. We're
Right.
not in the same market. It's an
Right.
entirely different animal today. The mortgage industry is very different than it was back then. Lending is still very controlled. The rules are very tight. People have more equity in their homes now than they ever have in the history. So that in and of itself, if there were to be some kind of a crunch, people have equity. They're not going to walk away from that. They're going to sell their homes if push came to shove. Foreclosures that are at a very normal level, so there's no indication that people who might have taken advantage of deferments and things like that are going into default. They're remedying those things. They're getting back
Right.
on track and they're making their mortgage payments. So to go back to the question about waiting, I want to use an example because you had a property that sold earlier this year up in Jensen Beach. You sold it for $700,000.
Correct.
And based on the appreciation, that house now is probably worth roughly $730,000,
Correct.
give or take. And you could tell us better. That's your area of expertise, obviously. But so July to the very beginning of December, $30,000 in appreciation. Well, if the rates had even moved a half a point, it would have made a difference in that particular transaction of roughly $150 a month. So do you want to wait and hope the rates are going to move and give up $30,000 worth of equity appreciation in six
Sure.
months? Or do you
Right.
want to
Right.
go ahead and take that rate and pay maybe what you think is going to be a little bit extra? You're still way ahead from an equity standpoint. Here's
Absolutely.
the other piece. If these bonds go down and these rates go up, there's also some indications and talk that they think that'll be temporary and they could peel back again. The good
Right.
news is appreciation forecasts are still very strong. So
Absolutely.
the professionals are calling for the next 18 months that we're going to continue to see very strong appreciation rates. So I think it's important if you want to own a home, buy that home sooner than later and
Right.
understand that that equity appreciation is far greater than the difference in the fluctuation of an interest rate when you're talking about the gains and the pros and the cons of waiting versus what these rates are going to do.
Right. So what are the current rate now approximately?
Yeah, so it depends. Government loans typically run a little bit lower, and we're locking loans still for government stuff in the twos, two and a half, two and three
Wow.
quarters, depending on credit score. There's a lot of variables that play into the interest rate.
Right.
Conventional loans are in the low threes, three and three eighths, three and a half. And again, depending on credit scores,
Right.
depending on loan to values, and even depending on the size of the transaction, which, I don't know if you saw this week, but they just increased the conventional loan limits.
Yes.
Now we're going to be looking at a $647,000 conventional loan limit, which is great. People before would have been faced with jumbo terms, which are typically a little different than what they are for the conventional
Absolutely.
and the government transactions.
Right. So as far as your forecast, I know you don't have a crystal ball, but do you see rates staying this way for a while? Do you think they're going to go up, or what's your feeling on
Yeah.
that?
I think that we're going to see, I would expect that we might see a little bit of a tick up. I don't think it's going to be substantial. I don't think we're talking about jumping up 2 or 3 points.
Right.
I think that we could see it get up into, what I would call a normal range, because we've really been below any kind of a
Absolutely.
normal range for a
For
really
a
long
while.
time.
Yeah.
Yeah.
Right.
Yeah. But
Yeah, I see a
man, if
lot
I
of
had that crystal
predictions.
ball,
Yeah, I see a lot of predictions, on the internet, at NAR and all the people saying that, 3.5, 3.8. But I don't see anything like you say that's really showing that it's going to go crazy. But what is it? What does a half a point do to a loan?
yeah, in that house that you had sold, I ran that at a $500,000 loan, and it only comes in at $150 difference
Right,
in a monthly payment for 50 basis points.
right.
So, when you go back to that equity appreciation versus that difference in that monthly payment, I just don't even know how you can make that comparison. If you want to build
Right.
wealth, if you want to get the gains of that instead of continuing to pay a landlord or, miss out, it's just, there's too many
And that's
reasons and too many
and that's
benefits.
that's the point I try to drive home to a lot of people because they say, "Well, you're a realtor, and it's always a good time to buy." And that it's like we're not like that. If I've
Right.
talked people out of buying homes that I felt that they shouldn't be in, for one reason or another. But really, what's the alternative? Paying rent? Where does that money go? Do you have a chance of
Yeah.
appreciation? You know what the average rent in Port St. Lucie is right now?
I don't, but I know it's going to be painful. Tell us.
It's about $2,500 a month.
Yeah.
I
Wow.
mean, that,
Wow.
yeah. And we're talking about, just a year or two ago, you could find something for 15, 16, 17. It's not happening. You got a
Yeah.
condo, two-bedroom, two-bath condo, you're looking at 15, 16, 17, $1,800. So what's the alternative? I mean, to me, even if real estate stays the same, the pricing stays the same, you're locked in. You don't have to worry about your landlord 12 months later, because that's what's going on now too. Is a lot of the landlords, the people that were paying that 15, 1600, 1800 a year, their lease is up and they're jumping them up,
Yeah.
or making a
Yeah.
move. So where do you go? Where do you go? So maybe for investments or second homes, you may want to, you could play that game where, well, maybe I'll wait, maybe I won't. Well, it's like having a second or third car. It's kind of nice to have, but it's not necessary. But if you're talking about a primary residence and you in between buying and renting, to me, it's a no-brainer because of the
Yeah.
interest rates. My first home in the 80s cost me 10.5%. I mean, that was my first home. Yes, the prices were a lot lower, but
That's fair.
that was, yeah, I mean, it was high. Now
Yeah.
we're talking about, we've been under six for couple of years now,
Yeah. A long
so,
time. We haven't seen six in a decade.
right,
So
right.
they've been really incredible. And I'm like you, Andrew. I bought my first house. I built my first home in Port St. Lucie in 1994, and the rates back then were 7.5% and 8%.
Right.
So what a difference.
I hope you enjoyed that short clip. And if you'd like to see another one, click right here. And if you would like to see the entire video, click right here. Thank you so much for watching, and I'll see you on the next one.